Hey guys, welcome back to the channel for another banger. So today I'm going to be reading an article from Newswire. It's talking about SOS's receipt of the New York Stock Market Exchange non-compliance letter regarding ADS trading price. Now, y'all, before I give any comments, I'm just gonna read through it so that we have some context on what's actually going on. So without further ado, I'll go into the video. So on February 11th, 2022, SOS Limited announced the company has received a letter from the New York Exchange dated January 14th, 2022. That's a bit odd because if they sent the letter on January 14th, it's crazy that it took a month to get to them, or at least for them to announce it, notifying SOS that it is below compliance standards due to the trading price of SOS American Depository shares. Now, I think we all know that. I think SOS had a high of $8, if I'm not mistaken, $8 to $6 around there. And it's not trading at 67 cents at the time that I'm making this video. So this probably has to do with that, as now it has fallen into like penny stock, like not even like $3 like penny stock, but cents penny stock. So, pursuant to the New York Stock Exchange Rule 802.10c, a company will be considered to be below compliance standards if the average closing price of a security, as reported on the consolidated tape, is less than $1 over a consecutive 30-day period. So, I was right about the fact that it's about their stock market price dropping below $1. So, once a company is notified, they must bring its share price and average share price back above $1 by 6 months following receipt of that notification. Now, to me, what this means is that SOS gotta get its shit together. But if this is the case, we may see a reverse stock split. Now, somebody was making fun of me on this channel because I was like, what is RS? Like, but yeah, that's might be what is going to happen to this stock. That would be extra sad. That would be too sad. But the company can regain compliance at any time during the 6-month cure period if on the last trading day of the calendar month during the cure period the company has a closing price of at least $1 and an average closing share price of at least $1 over the 30-day period ending the last day of that month. So in the event that the expiration of the 6-month cure period both $1 closing share price on the last trading day of the cure period at a $1 average closing share price over the 30-day trading period ending on the last trading day of the cure period are not attained, the New York Stock Exchange will commence suspension and delisting procedures. So that was a lot of legal terminology, so I will just go over that in simple terms. What they're basically saying is that SOS has to trade over the $1 above $1 in the next 6 months, or at least some point within the 6 months, and that if they're unable to do this, they are essentially going to get delisted. Which honestly, SOS has been beat down a lot. As we know, it is a crypto mining stock and does also a bunch of other stuff like finance and healthcare, but they are leaving, or at least they have left China and are trying to start in the US. So I think that that's probably why their stock has also been beaten a lot, right? Also, crypto has been down, and they have been, like, mining was literally banned in China. So that's why we are seeing this stock price. As I said in also a previous video, inflation is probably playing a part into this. Not only this, but this was considered like a high growth stock. So essentially a stock that has very high risk and very high reward. Now, what this essentially means is that a lot of those stocks have gotten beaten down anyway. High growth stocks were the first to be beat down in 2021. And we have seen even some of the best stocks with the best value and the best fundamentals be beaten down by a lot. We have seen ARC Genomics literally be slashed in half from where it was in 2021. So honestly, what do I think about this? I think that because of this, if they're unable to trade above $1, not only may there be a reserve stock split, which essentially means, if you guys don't know what that means, the stock is going to be literally like one stock. So it could be like 10 for 1, or 1 for 10. So 10 stocks are going to be shrinked into 1. So a reserve stock split, reverse, is literally the opposite of the just normal stock split. So whereas a normal stock split is a good thing, a reverse stock split is never a good thing. Okay, it is usually helping the company rather than the people to avoid such things such as delisting or suspension. Now, the notice has no immediate impact on the listing of the company's ADS, which will continue to be listed and traded on the New York Stock Exchange during the cure period, subject to continued compliance with other listing requirements of the New York Stock Exchange. Now, if you do not know what a cure period is, a cure period is essentially those 6 months that they have been given to get their shit together. Now, y'all know my opinion. I kind of gave it throughout the video. That's essentially it when it comes to this. That is all I have to say. If you found this video informative and helpful, don't forget to click that subscribe button, like and comment what you guys think is going to happen. Yeah, so yeah, I'll see you in my next video, which is actually going to be me reading the lawsuits. Yeah, so I'll see you. Bye.